Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this October 1st, Thursday, 2020, just getting on to 6:50 p.m. Central Time. I've waited as long as I can, but I've got to put this out so I can do my other work. Why am I waiting? I'm waiting because I want to know, did anything get done at all between the Democrats and Republicans for the COVID relief? Ms. Pelosi said if they can't do it today, they'll vote tonight. That could be a bluff, we don't know. If they're close enough and both sides are giving ground and they see there's movement, I think they'll tell everybody in Congress they got to wait for tomorrow. You're not going home right now. We'll see if we make more ground. That's what they have to do. They can't just run out because you know the reason they didn't reach a deal, that's going to be in the press right away. So if they're getting closer, they don't want to be the one accused. Well, we were making headway and we backed out. It's going to have to be a reason that they back out. What happens if they back out? Well, you can write off the idea of COVID relief until after the election, and God knows when the result of that will come out. I know in Illinois we began voting today. Many states began. The process is here. It's right in front of us. I didn't like what happened today in copper. Copper crashed. You got 6-7% break in copper prices out of left field. It just came, and you know, when copper goes, it's a warning sign. It's called Dr. Copper for a reason. A lot of traders look at it as the canary in the mine, and it tells you, are things going to be good or bad? That thing coming down, it's a warning sign, I think, for all of us. Foreign currency markets, everybody's waiting to know what's going to happen on this package. Energy markets, as the COVID cases around the world keep increasing, that weighs on energy demand. So as you can see in the S&P on a weekly chart of closes, just closes, you're still up 2.5% for the week. The market has done well. It's rallied over the last high, but where does it close is going to be the key. So tomorrow's the last day of the week. It's going to be an important close. When you take a look at what a daily bar chart looks like, you can see the market broke to 3,200. It's come back roughly 180 points or so, and it's just sort of sitting here in a minor uptrend. You have the pattern of higher lows, higher highs. To break that pattern, you've got to get back under 32.91 1/4. So if you believe that a trend is defined without any filters on it of a pattern of higher lows, higher highs, you have it. The market is trading over the 18-day average of closes. I consider that bullish. Why? I define bias as a filter on the swing line. When the bias is up and the trend's already up, it's systems go, waiting to see what is momentum doing. Also, it depends where's resistance points. Well, the resistance being here is back up at 34.25. When I put on the momentum, you're overbought. Any reading over 70 by either number that make up the slow stochastic, it'll inevitably first be the red line, but on the way back down on corrections, different things happen. So you've got to always pay attention to it. But you're overbought. So if the market rallies to 34.25 off good news, I'd still be looking for the pros to take money off. So let's assume a deal's done tonight, which I want to happen. Bingo. Do we need all that money spent? No. So the 2.2 trillion, I would assume, would trim itself under 2 trillion to get a deal done for people that really need the money and industries that need it. In the NASDAQ, you got to remember, this pandemic was nobody's fault. You know, it's nonsense to blame President Trump. It's nature. It's God. It's whatever you want to call it. It's a disease. I don't know where it comes from, but it's here and you got to deal with it. Here's your resistance point. The upper Bollinger Band. I think the pros got out today of some of their NASDAQ position. In the Dow, if you can rally up further, I look for the resistance, 28,235. And by the way, there's a lot of you that write that you don't believe COVID is real. I'm not going to argue with you. It's up to you. But I had a mother that was alive and for a while there, and she's passed. But it'd be terrible in the nursing home that she was in that I couldn't go visit her because of this. I mean, I can't even imagine that. Lower low, higher high. You can see how the market is just playing back and forth, not doing an awful lot there. When I come to the VIX, and this takes just a moment to load in, come on, generally about 8 seconds, you've got here the lower highs, higher lows right now. You're in a stall. If the market gets down to 24.15, I'd be looking for the pros to be writing puts to get back up to the 2700 level. If the market can get over 27.43, I think you negate the downtrend. Everything's waiting to see how this is going to go. We broke yesterday really hard. If you can see here, here's the break that we broke on Thursday. And this was yesterday. We followed through, went lower today, came right back. And what number did you go back up to? I want you to look at my concept of the line in the sand. Here's the 18-day average. You got down all the way here, came back, and you stopped right at it. The market's not trending. It's just whipping itself between those Bollinger Bands, and you're doing the same here in the 10-year notes. Why? Well, gee, are we going to get the COVID relief or not? What does that mean for the economy? Is that going to give us a boost through the end of the year? Is it going to save the airlines? I can go on and on and on. You're not going to get it. What does that mean? How do we get through all this? The market's churning. The money is trying to figure out what to do. You may know what to do, but you're looking at the summation of what everybody thinks what to do. You're not trending in the dollar. You got a lower and low. You went up, you ran the upper Bollinger Band, and you fell right back to that line in the sand, and you're sitting there. The flip-flop of this is the euro. On the dollar index, the euro's weighted as such. It's about 55% of the dollar index. Always keep that in the back of your mind for the weightings. All you did is rally back to the 18-day average. I kept telling you, I think it's going to get there, and it most certainly did. It had lost its embedded reading, got up to the number, and now it's neutral as I see it. On the swing line and this action, it's still bearish. Lower highs, lower lows, and you're under the 18-day average. So if you were to ask me on a position basis, that was it. I was looking for this rally, got it. The yen, I'm just looking for churning until we get an answer on this COVID. And of course, we're going to get jobs data tomorrow, but I don't know what takes precedent tomorrow. It's going to be an interesting day. It's hard to trade days like this. On Bitcoin, now you've got lower highs, lower low, under the 18-day average momentum turned down. Until today's high is taken out, the market has the potential maybe to make a run towards that lower Bollinger Band. It's certainly in a downtrend. In the WTI, you've been staying under, and this is the differential between WTI and Brent. You've been staying under that 18-day average, and the differential keeps shrinking. And as that's happened, today's action in these energies, they just caved in. The markets just said, you know, COVID picking up everywhere again. Where's anybody going to fly? No cruise ships. We heard the president extended that order, at least in America. And as you're watching foreign countries getting new cases, do you honestly think they're telling people go around your business as normal? No. So it weighed on the market, and that's what all happened today. You're back in your downtrend modes, could be going to lower Bollinger Bands. You'd have to take out today's highs, either on Friday or Monday, to say, nah, the game has changed. They caught those people short. That's how I'd view the patterns here. And in the nat gas, I don't know how you catch that moving straight down to that one, but I'll let you people do that. I don't know how to do all that. You know, my morning subscriber video, what is the purpose of it? At 5:40 in the morning, I start recording, and I start you off what of importance has taken place in Asia, what of importance took place in Europe, and then bringing you into America, for example, what's happened, how's the market reacting to COVID deal, no COVID deal, jobs data coming out, all the other reports for the day. I bring you into the fundamentals first. Then right after that, we go in and we review 40 charts with more studies than you're seeing here, and I'm really specific. I will tell you, I want you to buy here. Here's where the sale is. You don't have to follow me, but it's what I think you should be doing. The purpose is you probably have your own trade idea anyways, and now you're looking for somebody maybe you respect that their technical knowledge. You want to see what they're saying about the market. Gee, I want to buy. Look at it. He's saying the same thing. I want to buy. Why is he bearish? You're asking yourself those questions. How do you get it? $7.95 for 30 days. Come on. You go out and you get a cup of coffee somewhere. By the time you pay your Starbucks with the tip, you're about $7.95 in most cases. You're going to get this for 30 days. That drink's gone in 15 minutes. You not only get that, I'm going to be holding my live webinars. They're paid for. They're free to my subscribers. Then I'm going to start, now that it's October, I'll start more special reports. Again, to see them on our website, you got to pay for them unless you're a subscriber. Subscribers get an awful lot of value for very little money. Take advantage. I'm Ira Epstein. I can't wait to wake up in the morning and tell you what happened. I'll see you then.